Hello, my name is Krista Youngstrom, and I will be presenting the secondary mortgage market. What is the secondary mortgage market? This is a place where home loans are bought and sold by investors. So when you buy a home loan from the bank, if the bank doesn't have enough money circulating around in its company, it can sell your mortgage to Fannie Mae or Freddie Mac. And then Fannie Mae or Freddie Mac can sell that mortgage to investors. And this market makes it possible for almost anyone to own a home. So the primary mortgage market could run out of money if that was the only market, because there's a lot of people in the world or in the US that want to apply for a home loan, but if they don't have enough money to, um, accept all those home loans, then they can't, people won't own homes. So the secondary mortgage market makes it possible for there to be enough money for everyone that wants to apply for a home loan and is accepted to buy a home. The current situation is that right now it's fairly simple and fairly easy to get a home loan. So before, only larger banks could afford to loan out mortgages, and so it was costly because there wasn't competition, and so they could charge as high as they want, and there was a high interest rate, and so it made it very difficult to pay off the mortgage. And with investors, the current situation is that most loans are packaged, so those that are the same amount of time are packaged together. Mortgages that are 30 years or 15 years and 10 years are all packaged within like 30 years, 15 years together, and 10-year loans together. So this just keeps the percentage rate the same. And Fannie Mae and Freddie Mac are the mortgage-backed security investors. These are really big companies, and I believe they are the only two, but I am not sure on that. What are the future possibilities? Since consumer debt is rising, mortgage lenders are thriving. So while it's easier to own a home, and I put that in quotes because you start a payment for a home, you don't own it until you completely pay it off. So it's easier to be accepted for a home loan than it is to pay off the mortgage. So one hope is that more investing markets other than Fannie Mae and Freddie Mac will be created to increase this competition and maybe decrease the interest rates. From researching about the secondary mortgage market, it made me aware of how much money or plastic credit cards is being shifted around, and it goes down this line. And so I definitely want to avoid a long mortgage because it seems like it really doubles and maybe triples um, the amount of money that you actually put towards your home. And I would like to learn more about becoming an investor um, in home loans, because I feel like that is a strong market that is growing a lot because everyone is looking for a house to buy or to pay for, because it's a lot cheaper than paying rent for 60 years. Yes. I hope you like my presentation. Here are my references that I used.